Hello, everybody. Seems quiet. Let me know if the sound is working or shout at me if it's not. Normally I hear the preview call. Anyway, let's go. It's Friday. This one's called Intense Calls. And you'll find out in a minute why, including some other news. We're going to talk about Bitcoin, crypto, 3% rule, 3.6% rule, AI, Bitcoin miners, midterm traps, what things actually look like for 2026, as well as some insane predictions. Really nutty. Sound is good. Excellent. Thank you for letting me know. And thank you to the best mods in the world as well. Let's get into it before I think I'm going to lose my voice today. Not sure why. Disclaimer, this is not financial advice. And big shout out to everybody on Patreon too. This is from, I believe, the best Patreon available. Thank you so much. Let's go to sentiment and signals first. We have a big change over last week. This week, stock market is now in greed, 63, up from neutral. And guess what? Crypto is in neutral, up to 49. We went to the longest period ever of extreme fear for crypto in its history. And now it's back. Back to neutral. Next step is greed, and then maybe extreme greed. So that's actually a good sign for the markets. People are not afraid anymore. Maybe if they're not afraid, they might deploy some cash. Let's talk about Bitcoin and crypto as well, because in January is up over 8.5% so far, which is fantastic, but it's Friday. And every Friday, like clockwork, guess what happens? The morning is weak. Once we hit 1 p.m. Pacific, 4 o'clock Eastern time, stock markets close and Bitcoin rallies. It's going to happen again today. Mark my words. Always does. And that's the Friday afternoon pump. Now we are, another bit of good news too, we are $4,000 away from the short-term holder cost basis. This is a level where sometimes people get a little bit afraid. When the short-term holders are losing money, sometimes they sell. When they're making money, they hold. So we're only $4,000 away from getting to this level where they are making money again. And when they're making money, they're less inclined to sell. That's why this is important. So we'll see how far we get. Also, let's check in on gold. This is a cool chart from S. Minston. He looked at all the historic gold bull markets back in 2011, 2016, 2019, all the way through 2020. Remember, these are times when the markets are nervous. When the markets are afraid, gold does very well. Guess what? Gold just had its biggest rampage ever in history. It went completely bonkers. Now, the question is what happens next? If history repeats, Bitcoin is overdue for a run. And we keep saying that. But also over the last 2 years, history has not repeated at all. So maybe throw that out of the window. But eventually it should do it. So what I like to do is look at the Bitcoin gold pair chart to see exactly where we are. And this is exactly that pair chart. You can see here, we are now down around the 21 ounces of gold per Bitcoin. The 200-day moving average is 28.5 ounces of gold per Bitcoin. So we are really deviating away from where we normally should be. When you look at this, it also tells you that technically Bitcoin is the same value to gold as it was in 2020. We are level 3 on the ATR. Got a buy signal. Trend hasn't turned yet, but this is also the monthly chart we're looking at too, not the daily. Daily, it's turned. And we'll see what happens next. But basically, historically, Bitcoin is very cheap compared to gold. It's also very cheap compared to the S&P 500, etc., etc. It's cheap compared to silver. It's cheap compared to global money. It's cheap compared to everything. Speaking of, there is a little bit of anxiety out there in the US, which drives a lot of market activity. It's what's called a midterm year. The elections are every 4 years, but every 2 years, and between the 4 years, they have this midterm thing. Just to make sure nothing ever gets done in government, they keep swapping it up. And that's kind of how it works. But Bitcoin is now, historically, again, this is where we don't want history to repeat. But Bitcoin historically has done very, very bad in midterm election years. Basically, the lines here, the vertical lines, 2014, 2018, 2022, 2026, all happen in November. Bitcoin always tanks into the midterms. It tanked in 2014, it tanked in 2018, tanked in 2022, and typically, get this, by the time the midterms come around, it's normally the bottom of the bear, if you could believe that or not. That's how fast these cycles go. Bottom of the bear, November 2026, if history repeats. But this time could be very, very different because everything is different. And I believe, normally, nothing really happens with the markets. Everybody just kind of waits for the midterms. But I believe the current administration is looking to juice the markets, looking to cut interest rates, looking to stop waste, fraud, and abuse, looking to spend more. And we'll see where this goes with Bitcoin. But what could happen next, because we never really had a bull market per se. Now we got real estate control, housing being juiced. Bitcoin could actually have an up year. That's what many people believe. But the craziest of all forecasts, please make sure you're sitting down, because this is, much respect to Samson Mao, and he's normally good. But his calls this year, I don't know what he was drinking. I think he was drinking a lot of champagne when he said this. He said Bitcoin is going to $1.33 million in 2026. We're going to get an Omega candle, which is basically a very large spike of, it depends on who you talk to. Some people say it's 10,000. Some people say it's 100,000. Some people say it's 10%, etc. in a day. Now, and at least one country launches Bitcoin bonds, theoretically possible. Could be El Salvador. Elon Musk goes hard into Bitcoin. Not sure about that. MicroStrategy goes to 5,000. Well, if Bitcoin does go to 1.33 million, yes, the price is almost 5,500. And Bitcoin outperforms metals. Well, it depends which metal. I think of all of them, the last one probably has the highest odds. But the rest of this is not going to happen. And I will gladly eat multiple shoes live if it does happen. So it'd be great for everybody. But again, I think they're very unrealistic. But maybe he knows something. He does work with large sovereigns and helps them, convince them at least to deploy into Bitcoin. We shall see. Now, there are some other positive things happening out there. Not to get too excited. We're only like 12 trading days into the year so far. But so far, for the month, and it's not even half over, Bitcoin ETFs have come raging back, and they've already absorbed 17,000 Bitcoin in less than 2 weeks. Now, the key part of this, which was snug, shout out to Econometrics, and I've done my own calculations as well, and back tested his, and we're more or less close. But every 10,000 Bitcoin that are absorbed into the ETFs, the Bitcoin price goes up by 3.6%. So you can take 1.7 times 3.6%, you get about 5.5%. And guess what? Bitcoin is up 8.5% so far. But that doesn't even take into account other stuff that's happening too. Not only have the ETFs absorbed 17,000, Michael Saylor has absorbed 15,000 in 2 weeks. These two combined, 32,000. Multiply by that 3.6% per 10,000. 3.2 times 3.6 takes you to about 11% and change. And we're up 8.5%. So it's lagging a little bit, but it takes time for everything to percolate through the system. Either way, it's insane. And a lot of people complain about the ETFs and they complain about MicroStrategy and everything else. But I will maintain, if it wasn't for these two big buyers, the price would be nowhere near where it is right now. That's probably a fact. Also, Strategy are closing in on 700,000 Bitcoin. You know, some people say that is whatever 2% of the supply, or nearly 3% of the supply, I should say, considering the 21 million Bitcoin. But people forget there'll never be more than 15 million Bitcoin. So once he gets to 750K, he will have 5% of the Bitcoin supply. Because remember, Satoshi lockup, tons are lost, etc., etc. We'll never see the light of day. Let's talk about some other ETFs. The Solana ETF in just 10 weeks broke $1.2 billion. 3 red days, but the rest of the days are green, which is good. 1.2 billion is not bad. It's a lot of spend coming in. And Solana is wrecking people to the upside because a lot of people were short, hoping for a $20 Solana, and they all got liquidated over the last week or so. And tokenization is something that Larry Fink does not stop talking about. And there's one chain that rules the roost for tokenization. Shared this before, just to say again, Solana is the number one chain based on market cap of tokenized stocks. And it's running away. And the adoption is going nutty. Expect a lot more from this space as well. Let's talk about the asteroid that's coming to hit us all. AI and markets. Some interesting news, which is also adjacent to Bitcoin and crypto. Everything is connected, my friends. But Riot gets a huge deal with AMD around AI. They actually had to sell about, I think, 1,100 Bitcoin to raise $100 million to buy land, to develop a hyperscale data center that has how much gigawatts of power? Well, 200-acre site for, I forget how much power they were going to generate. But anyway, it's going to be a lot of power on this facility. And AMD has signed a massive 10-year deal with Riot, which is the second biggest chip maker on the planet. And they will be the first tenant using Riot's facility to run their own powerful computer servers on behalf of customers. And the deal for Riot is worth $311 million, and that's expandable up to $1 billion. The first tranche is $311 million. So they sold $100 million of Bitcoin to buy the land to do this and make it happen, to make $300 million up to $1 billion. So with that, Riot has spiked pretty massively today, up about, I think, 14%, now $18.68. And in full disclosure, I do own Riot, have not sold it. I own CleanSpark, I own Marathon. Marathon's been a real turd, but anyway, moving on. Let's talk about Goldfinger. There's a theory running around the internet right now. Elon posted this picture, and sometimes he drops breadcrumbs on purpose. And this is the Optimus robot. But if you look at the hand, it looks almost human-like it's got some white skin on it that's transparent. And inside, some very fine mechanics or whatever else. We're not sure exactly what that is, or if it's fake, or if it's something else. But he did say within 3 years, Optimus will be far better than human surgeons at procedures, far more accurate and precise, and of course can work all day too. So we'll see what happens with this Optimus Goldfinger. And I did cover the other day the news from Jason Calacanis yesterday, I think, about how he believes it's completely sublime. People will completely forget Tesla ever made cars once they start seeing the production of these robots, which are coming. Humanoids are coming. And Jim Cramer, it's rare he says something that I agree with, but here we are. Jim Cramer says Elon Musk's lawsuit against OpenAI is a serious threat and could derail any future IPO plans for Sam Altman and OpenAI. And they probably will require a massive private funding round before the trial. And guess what? It's not a frivolous lawsuit. The receipts are in, and there's tons of court documents that are available for us all to read and check them out. I went through one this morning, and it's shocking. It's shocking the scheming that OpenAI did behind the scenes, behind Elon Musk's back, after him starting the whole company, funding it, building the team, etc. So Elon Musk, according to Kalshi, remember prediction markets, going to be huge in 2026, 57% chance that Elon Musk wins his case against OpenAI. And this also has an impact, not just for OpenAI and their funding. They've already completely fallen behind in the AI race. Grok is superior, Gemini is superior, Claude is superior, which is from Anthropic. But guess what? This also impacts Microsoft. Microsoft are in bed with Sam Altman. Not good. So we'll see what happens next anyway. And shout out to our friends in Norway. Nearly 100% of all cars now sold in Norway are battery electric vehicles like Tesla. Nearly all. That's it. Now, they are a pretty advanced economy, but a study was done as to why they buy them. They don't buy them to be cool or save the environment. They buy them for economic reasons. They're better, cheaper, faster, safer. And that's why they buy them. So People see this as the harbinger of things to come, just like what's happening in China, and EVs will dominate and ice will continue to melt as we go forward. That's just a fact of life. And sad news for those looking to buy a big bag of memory, high performance bandwidth memory, HBM. It's sold out for 2026 from players like SK Hynix, Samsung Electronics, and Micron. It's out. Micron had another huge day today. And these memory chips are key to players like Marvel, Broadcom, etc., NVIDIA, AMD, Google, Amazon, Meta, Microsoft, Intel. They all need them. And they're gone. So we have our first bottleneck, the so-called bubble. But it can't be a bubble when there's no excess supply of anything. People forget that. And that's a simple fact of life as well. So I guess these, I know Samsung is going to work overtime to get new versions of memory up, especially for the new NVIDIA Rubin chip, which is less or uses memory in a much more efficient way, so won't require as much as well. Let's talk about macro too, which is also ties into crypto in a very big way. I made a post on this on Patreon the other day about why the banks are fighting the so-called market structure bill. It's because they do not want stablecoins eating their lunch. The way it works in the US, I don't know if it's similar in other parts of the world, but you deposit your hard-earned money into a bank, they pay you zero. You can put $1 million with Bank of America, they'll pay you 0.01% or something crazy like that, and they'll lend out your money for 7%. That's a big spread. They get it all. You get nothing. But what they're afraid of is stablecoins. And people, and it was Brian Armstrong that pointed this out. People, the banks, I should say, are terrified. Because if people are allowed to get yield on stablecoins, do you think they're going to keep their money at their bank anymore? No. Banks will lose their gravy train. All the money will go into stablecoins, and people are getting their 3 or 4% yield there. Just like what Tether do already and other players. So this is why Brian Armstrong is quite vocal, saying the market structure bill is BS, rejected, because it's written by banksters, not written by crypto bros. So we'll see where it all goes. Anyway, people are hoping for that bill to give a big boost to crypto, but it does need to be amended. You can't have the banksters continuing on their gravy train when there's a ton of effectiveness and efficiency to be had by using stablecoins the proper way, with yield, I might add. Now let's check in on global liquidity as well. Again, we're in the macro section, but it's tied to Bitcoin. This is the global M2 expansion. Now I want you to look at the dark blue line here. This is the year-over-year change, and it's gone on a rampage. And this typically is a tailwind for Bitcoin. The last time we had a rampage like this was back in 2020 during C19. Before that was 2017. Before that was 2015. And every single time that this happened, guess what? Bitcoin price went up. Will it happen this time? I don't know. Again, we go back to history and we'll see. Also, a little bit of bad news. This is a new study that came out. It talked about the K-shaped economy, that the top 10% of earners in the United States account for 49% of all spending, and the bottom 80% account for 25% of all spending. So basically the easy way to think about this is it's getting more egregious. The rich are getting richer, and of course they're spending more, they're driving GDP, and the others don't have as much. But the key message here is own hard assets. The reason the red goes up is because they own hard assets. The reason blue goes down is because they don't own any. So to escape the matrix, get some of those hard assets. Now, back to AI and electricity and macro. This is the US data center. Electric consumption is going to explode 2.5x from where it is today by the year 2030. It may even go faster than that. Is the grid ready for it? No. Do electric prices keep on increasing in the US? Yes. Just like they are in Europe and other places. It's bad. Something needs to be fixed fast. And then you can double the size, the capability of the grid if you add megapacks. Guess who's got megapacks? This guy. Wait till the data centers figure out they need megapacks to run their data centers too. And his net worth is now, from Forbes, $725.7 billion. There's actually a crazy number, again, going around in prediction markets and Kalshi. And Greenland is reportedly worth $700 billion for that piece of land. Who, if any kids at home, calculate how many Bitcoin is in $700 billion. That's a fun number. It's actually, you can guess it. It's about 700,000. Anyhow, the question is, if somebody had 700,000 Bitcoin, 7 million Bitcoin, I dropped a zero in my head, they could buy Greenland. And back to intense calls and Samson Mao. This one is the meme du jour. Looks like this pigeon had a pretty intense phone call. And I must say, I am guilty of that too. I'm rarely on the phone, but if I am on the phone, I walk around and it helps me think. I always stand anyway, but I walk and think, walk around in circles just like this pigeon. So try it at home. It makes phone calls better and your brain works better as well when you're moving. And with that, everybody, thank you so much for coming. I want to thank all the lovely people for being here. Shout out to Anglo Blackson, Nick M, GQ Trader, Halle Kayla up there in Hawaii, B-Man and IQE Labs, of course, Sean D and T&D and K8. You are all amazing. Take care, my friends. See you all real soon. Bye-bye.